5 cash flow assets you need to survive the recession. With uncertain times ahead, it's more important to have our investments in order and a plan to weather any storm. I'm excited to share the 5 cash flow assets by a successful investor and co-founder of asset management firm GMO, Jeremy Grantham. These assets can transform your life to true financial freedom if you want to survive and thrive during a recession. On to the first asset that Jeremy Grantham wants you to hold on to during a recession is stocks. Now, I'm not talking about day trading or trying to get rich quickly. I'm talking about investing in blue-chip companies that pay dividends and have a history of consistent growth. If you're looking for an intelligent investment decision, then putting your money in stocks is an excellent choice that you should seriously consider. When you invest in a stock, you buy a small piece of that company, and as your stock rises, so do your ownership and potential earnings.
It doesn't happen. The commercial imperative is overwhelming to stay bullish. It's how you make money.
If you're right, and stocks are in a multi-sigma deviation from the statistical trend, tell me what happens. The S&P 500 peaked at almost 4,800 points. Where does it bottom?
The trend line, being slightly generous, is 2,500.
Stocks have historically outperformed other investments over the long term, meaning you have a good chance of making money from investing in the right stocks. Another significant benefit of investing in stocks is the diversification of your portfolio. With different sectors like technology, healthcare, or retail, there is always a stock worth investing in. When you have a range of stocks in your portfolio, it means you are not relying on just 1 or 2 companies to deliver your returns. It helps to smooth out some of the ups and downs in individual stock prices, which may lower your overall risk. Investing in stocks also provides potential for long-term growth. The stock market is not perfect, and the market has ups and downs. However, over time, stocks have shown a trend to move up, even with a few bumps along the road. You could make money if you invest in promising companies and hold on to your stocks for an extended period. Did you know people who invested in Amazon, Apple, or Microsoft stocks in the 2000s are now millionaires?
Value, or you're buying Amazon at some very high multiple of reported earnings. Amazon, the people making the decision on Amazon are absolutely much value investors, as I was when I was looking around for all these things selling below working capital years ago. So that has not changed. The 2 people that, one of whom made the investment in Amazon, they are looking at many hundreds of securities, and they can look at more than I can because they're managing less money, and their universe, possible universe, is greater. But they are looking for things that they feel they understand what will be developed by that business between now and Judgment Day in cash.
Another critical factor to consider when putting money in stocks is the dividends. Many companies pay out dividends to shareholders at regular intervals. This is an incredibly appealing benefit for people who want to earn money regularly from their stocks, especially those nearing retirement age. Investing in stocks allows you to put your money to work without actively managing it yourself. It's easy. If you subscribe to my channel and turn on the notifications bell, I will keep you informed and help you make choices where you could influence your investment outcomes, particularly when you are starting. For retirement, wealth building, or investing in your future, stocks are an excellent investment choice. On to the second asset that Jeremy Grantham wants you to hold on to during a recession is farmland. Farmland is not a new investment opportunity, but it is becoming increasingly popular among investors who recognize its many benefits. One of the main reasons is that farmland is a tangible asset that provides a steady source of income. Whether renting out your land to farmers or growing your crops, farmland can provide a reliable income source that is less volatile than the stock market. In addition to providing a stable income stream, farmland is also a relatively low-risk investment compared to other asset classes, such as stocks and bonds. This is because farmland is a real asset not subject to the same market fluctuations as financial securities. Farm prices are more stable, and their value is less likely to be affected by market swings and unpredictable events. Another reason investors are turning to farmland is that it is a hedge against inflation. This is because the value of farmland and the cost of goods tend to rise. As demand for food, fuel, and fiber increases, the value of farmland is likely to increase as well, making it a valuable asset that will continue to appreciate over time. But what makes farmland especially interesting is that it is a finite resource. Let me explain this. Unlike other investment opportunities such as stocks or gold, you can't just create more land. As the world's population grows, the available land for farming is becoming increasingly scarce. This is especially true in regions where climate change affects crops. As a result, farmland's value will likely continue to rise in the coming years. Jeremy Grantham recommends that investors pay attention to farmland as a valuable asset class that should be part of any long-term investment strategy. He sees farmland as a unique opportunity to invest in a tangible asset that can provide a hedge against inflation.
If the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, for a 1% interest in all the farmland in the United States, pay our group, let's see, 10 million, pay us this bargain price, $25 billion. I'll write you a check this afternoon.
So, how can you invest in farmland? Depending on your budget and investment strategy, there are several ways to do this. You can purchase land outright, lease land to farmers, become a partner in a farming operation, or invest in a farmland-focused mutual fund or exchange-traded fund. Let us go to the third asset that Jeremy Grantham wants you to hold on to during a recession: gold. Gold has been a symbol of wealth for centuries, and for good reason. It holds its value and is a safe investment during economic uncertainty. As we face uncertain times, finding ways to protect and grow our wealth is more important than ever. And that's where gold comes in. Unlike currencies, gold has intrinsic value. It's a tangible asset that you can hold in your hands. And historically, it has maintained its value even during economic crises. This means it's a long-term investment asset. It's also a great way to diversify your portfolio. Adding gold to your investment portfolio will spread the risk and reduce your exposure to market volatility. Secondly, gold is a hedge against inflation. When the value of currencies drops, gold tends to rise, helping you protect your purchasing power. Grantham believes that the current level of government stimulus, combined with low interest rates, will eventually lead to inflation. In such a scenario, gold can provide a haven for investors as it typically retains its value during economic instability. Furthermore, finally, gold is easy to purchase and store. You can buy gold bullion or coins or even invest in gold-backed ETFs. Plus, you can store it in a safe or secure facility, giving you peace of mind knowing your investment is safe. Whether you're just starting your investment journey or have been investing for years, gold can help you reach your financial goals. So, what are you waiting for? Start investing in gold today and secure your financial future. The fourth asset that Jeremy Grantham wants you to hold on to during a recession is silver. Silver is a precious metal with countless industrial uses and a great way to diversify your investment portfolio. Silver has been used as a store of value and currency for thousands of years. Its value has never gone to zero and holds its worth during economic depressions. As technology advances and demand grows, the demand for silver will also increase. This creates an excellent opportunity for investors to profit from the price rise in the long run. So, how do you invest in silver? Investing in silver is easy. Silver ETFs and bullion coins provide easy access to silver investment.
Number one investment that everybody in the world can afford is silver. Everybody. And That's the good news. But will most people buy it? No, they'll save money instead. And they'll save money in spite of the fact that they're printing trillions of it.
You do not need detailed knowledge or expertise in investing in silver, as exchange-traded funds, ETFs, and bullion coins provide you with exposure to the silver market. With the current technology, you can also easily access and invest in silver through online brokerage platforms. On to the last asset that Jeremy Grantham wants you to hold on to during a recession are commodities. My subscribers, have you ever wondered what drives the wheels of the economy? It's the commodities we use every day. Commodities are the proper drivers of economic growth, from grains to metals to oil and gas. Investors are traditionally inclined towards purchasing company shares and stocks. Today, with the markets evolving furiously, investors are seeking alternative assets that offer more excellent stability. And for such stockholders, commodities are the perfect solution. The demand for commodities is rising as global populations increase and economies strengthen. Investing in commodities provides a unique opportunity to participate in global activity growth. When the economy is doing well, so does the demand for commodities. Therefore, investing in commodity-backed stocks ensures that you are investing in a thriving sector that will grow stronger as time passes. Jeremy Grantham recommends investing in commodities. Do you know why? Well, he has a track record of successful investment insights and has made some accurate predictions about market trends in the past. He is likely basing this advice on thorough research and analysis of the current economic and market conditions. Ultimately, commodities are finite resources that are produced and consumed by the environment. Since they're perishable, government policies cannot easily control their production levels. This means that their prices are an accurate reflection of supply and demand. For example, crops that undergo drought or wildfires can lead to a shortage in the market, leading to higher prices. Investing in a commodity fund will protect you throughout inflation and shield you when the market becomes overcrowded. Investing in commodities might seem challenging, but many ways exist to gain exposure to this sector, which include trading futures contracts, investing in commodity exchange-traded funds, ETFs, mutual funds, or buying physical commodities. In buying assets, a common belief is that higher risk equals higher return. However, this is not always true, and Jeremy Grantham's statement, "You don't get rewarded for taking a risk, you get rewarded for buying cheap assets," explains this concept quite well. Jeremy Grantham meant by this statement that investors are not necessarily rewarded for simply taking on higher risk, but rather for finding undervalued or underpriced assets. This means that investors who identify assets priced lower than their intrinsic value and stake in them may earn higher returns in the long run. As we all know, recessions can be brutal, and it's essential to prepare for them by betting on the right assets that protect your financial future. That's where these 5 tremendous cash flow assets come into play. Let me tell you a story of a billionaire who took into action Jeremy Grantham's cash flow assets, Robert Johnson. Robert Johnson founded Black Entertainment Television, BET, the world's largest black-owned cable network. In the early 1980s, Johnson saw a gap in the market for African American programming and decided to create his television network. At the time, cable television was starting to take off, and Johnson saw an opportunity to create a niche network for African American audiences. Johnson's bet paid off, and BET became wildly popular, reaching over 90 million households worldwide. In 2001, Johnson sold BET to Viacom for $3 billion, making him one of the wealthiest men in America. But Johnson didn't stop there. He invested in other cash flow assets, such as real estate, hotels, and private equity. Johnson's success is a testament to the power of cash flow assets. Johnson accumulated wealth over time by creating a television network that generated advertising revenue and licensing fees. Then, by diversifying his investments in other cash flow assets, Johnson was able to protect his wealth and generate passive income. Robert Johnson's story is an inspiring example of how to build wealth through cash flow assets. By identifying a gap in the market and creating a successful business, Johnson was able to generate significant income through advertising and licensing fees. Then, by diversifying into other cash flow assets, Johnson was able to protect his wealth and generate passive income. So, if you want to build wealth like Robert Johnson, consider investing in cash flow assets and start building your financial empire today. Remember, it's never too late to start building your cash flow assets. Keep learning, keep growing, and never give up on your dreams. In my next video, I will show you tricks of how millionaires made their first million.